Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the day street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll also get you expert views as to how should you be trading in this current market, where are the opportunities to invest in now for the long term as well. All of that coming up, but first up a quick check on how the markets are doing at this point in time as we inch closer to the end of the session. So the Nifty and the Sensex have been hovering near a very narrow range, around the flat line. Right now, 18,624 is what you can spot on the Nifty, 26 points higher in trade. The Sensex also up and about 92 odd points or so, 62,937 again. Both the indices are up by about 0.1-0.2% higher. The broader markets, the mid and the small caps are doing slightly better off, with the mid caps gaining about 0.25% in trade, and they have scaled the record levels as well. The Nifty mid cap 100 index at 33,636. The small cap 100 index, which also scaled record levels yesterday, is also trading around the same levels, 10,060 odd, with an uptick of about 20 odd levels right now. When we talk about the sectoral action in today's trading space, in terms of the movers, the Nifty Bank has improved in trade right now. It's trading near the high point of the day, 0.2% of an uptick for this one. And what's doing better among the constituents for the Nifty Bank clearly is the financial services that's also picked up pace at this point in time. FMCG space has been the top mover in the markets in terms of the sectoral action through the trading session and maintained. So the IT stocks have also turned positive, about 0.1% higher for this index as well. In terms of the other movers, we're also seeing some of the other, sectoral action, like auto space, in fact, is down in trade. That's not the one that's really participating in today's trading action. 0.2% odd of a fall is what you can really see here. Realty space is down in trade. Consumer durables also slightly down in trade as well. We are also seeing pharmas and the metal pack also declining about 0.8% or so. So what's holding up in the markets is clearly the private banks, the media stocks, slight gains coming in on the IT pack, FMCG, financial services. These are the ones that are actually holding up the markets at this point in time. Even the PSU banks not really contributing, flat with a negative bias at this point. In terms of the top movers and shakers, in terms of stocks, as far as the top Nifty 50 gainers are concerned, you can see the banks and the finance names really take the top spot now. Kotak Mahindra Bank, Bajaj Finserv, Bajaj Finance, all up by 1.5% in trade. Right now, you're also seeing HCL Technologies, Ultratech Cement, Wipro from the IT and cement pack also inching up higher. On the losing side, Hindalco is trading weaker with 1.5% cut. Dr. Reddy, Sun Pharma, Tata Steel, Tech Mahindra, the other laggards at this point. But time now to welcome our guest on the show. Abhishek Jain joins in. He's the head of research at Arihant Capital Markets. Welcome, Mr. Jain, and thank you so much for taking the time out for this discussion. Well, after yesterday, we did, and day before, Nifty Bank, then small caps. Today, the mid caps have actually hit, all-time high levels again. Your own sense of how soon do we see that getting replicated on the benchmark Nifty index?
So, good afternoon, ma'am. We have seen a good rally in the markets in last 2 months. So, we have seen rallies largely broad-driven. It's not only one specific to one particular sector. We have seen stocks doing well, sectors doing well, and the mid-cap participation was also good. Like if you see if you take exchange, which was lagging behind at around 29th of March this year, and now we have seen a lot of participation. In last 15-20 days, we've been hearing participation from the FIs also. There may be a small amount, but relatively FIs have been quite positive in the market right now at this point of time. On the stock side, we have seen now on the some of the traders part, they are confused kind of thing, because some of the stocks have moved up substantially. So you have seen some of the volumes are dipping on the market side, because the liquid there are stocks have moved up. So here there is a very institution specific activity is there right now in the market. Mid cap, there is obviously the result season is over, and the results are not as the worst as what the market was fearing initially. So actually, it is better than in many of the sectors. Apart from one or two IT companies, the results are largely on the okay side only right now. So I think that's why we have seen a rally in the market also right now. If you see last 1.5 months, some of the mid cap IT stocks, some of the banking names, even on the pharma side, uh, there has been a buying right now. I think now the issue is like we have seen, like there are stocks like Persistent, which were there at 4,005, has moved up to 5,000 odd levels. So now people are also looking at what to find out the opportunity. The margin of safety is going down in the market at this point of time.
Mm-hmm.
However, the liquidity is so strong right now. So any dip as of now is taking as a buying opportunity right now for the investors or maybe a traders, right?
Okay.
And
Yeah,
yes.
Mr. Chair, I wanted to understand, largely the markets are doing better. They started to pick up pace right after we saw the US debt ceiling concerns getting a little eased out, the FIS coming back as well. We still are awaiting what the action on the Fed and on the RBI's rate move will also be concerned. But looking at how China is sputtering at this point in time, do you think that India is perhaps the better placed market, and which is why you're seeing the optimism? And will that sustain is the bigger question.
Two things. First thing, people like I have seen, and this is my experience. I'm telling you, people don't look for the country; they look for the investment opportunities. So if you see like someone wants to play China, like you see, Chinese market has done very well in between October to when they started February right now, and they have
Hmm.
almost delivered 40-50% return. Hang if someone is invested in the markets. So it's not like this India specific or something. It's basically obviously there has been a certain preference which is given. The Indian like because we are talking to a lot of companies. So I'm just giving an example. We have just heard the commentary of Shelley Engineering right now. So this it's a listed company. They said a lot of business which they were expecting it to come. It's not coming in the toy business right now. My point is, in market generally investors look risk reward and where the opportunities are there, rather than because they know India specific money is hardly coming at this point of time. We are largely a market performer. If you see, take the last 6 to 9 months of window. However, in last 1.5 months, we have done a little bit of outperformance. But globally also, we have seen European markets or maybe US markets like Nasdaq hitting 52-week high. So a lot of global money is right now coming into the equities at this point of time. There were talks of recession, but I think the markets is smarter than all of us, and that is done decently well right now.
Okay. Banks and financial services have been actually, being one of the preferred spots for most of the analysts and investors right from the beginning of 2023. Now, the earnings have come out very, very supportive as well. The credit growth cycle turning, the asset quality issues really reducing. PSU banks really reporting 1 lakh crore rupees kind of a profit, which has been on a decadal high as well. How are you spotting the opportunities from here now? We do see that, the kind of trajectory has been improving, but how much more steam from here? And what is the strategy that you would advise investors to really approach the banking and the financial space?
So, ma'am, like one of the thing market is right now fearing how better it can be from these levels right now in the banking sector right now. Last year we have seen because of the lower base, we have seen very good rally in the global markets, specifically in the financial side also. There are stocks which have done very well right now. However, the fear is now what can do better from this thing right now. So because in terms of asset quality is also like it is, we are seeing the one of the best cycle in last few years. Even the credit growth is there right now. The banks have preserved their NIMs despite the in the rising interest rate environment. So people are not talking about. People are also talking about what exactly the NIMs they can sustain and what kind of NII growth. So a lot of people are talking about there has been a slowdown in FY24. But the companies on the manufacturing side, there has been a sharp demand in uh, capex activity at this point of time. Like after, like I think in last 9 years, this time we are seeing really seeing what is make in India is happening, and the utilization level of most of the companies are very good. And companies, a lot of companies we met also story is playing out right now. So on the banking side, I think as I mentioned, like the FIs are coming right now, and after a very long period of time, so obviously they'll be buying their favorites private sector banks, which is that's why we have seen some of the Axis banks of the world and all this thing have started doing very well right now. PSU banks, we have seen some of the Lagarde activities there right now. After the results, if you see SBI has not crossed its result days high. Same with some of the other PSU banks also. But the mid cap banks have been in an action right now, and people are looking again mid cap banks as a preferred pick at this point of time. However, our view is like let's take in like with agriculture. there's been some pickup in the rural economy in last few weeks, and I think they should do some of the PSU banks also. It's a matter of time where they're going to join the party.
Okay, but is there any space that you'd like to ask investors to avoid at this point in time? Which would that space be, or sector or theme be?
So we think many mid-cap IT companies have moved up substantially right now, like all the companies in the sectors right now. So I think there is one sector where we want to have a cautious view at this point of time. We may see one more quarter of good, but I think at this point of time, like some of the IT mid-cap IT names have moved up. So one should take like LTIMs of the world, or maybe now they are not no longer a small cap, mid caps. I think there will be a churning of stocks is expected, and I think like some of the stocks in the large caps domain have looked much more interesting at these levels right now. So one space is there. Second space we are avoiding right now is the chemical space. We've been negative, and we've been advising our clients to remain negative on the chemical space. I think the consolidation, and because of the China opening up, there's a lot of dumping is happening in the industry right now, and they. So I would like we are telling our clients, like we have met one company which has closed down its CMF facility, or there are other companies are there right now, so they are facing challenges right now. So these two things are there right now, where we believe there is an at this point of time you're going to see some challenges in terms of valuation also and earnings growth also.
Okay, any particular mid-cap stocks that you have on your radar right now that the Nifty mid-cap has scaled record levels, and you believe that, there is this space that one should really look at? Any particular stocks?
So, ma'am, there are two, three companies are there which I would discuss at this point of time. One is gold loan disbursement has picked up. The gold loan companies, after seeing the consolidation post the teaser loan wave off, there has been a decline in the overall gold loan AUM, and now after a very three quarters, they have shown a growth in their gold loan book right now. So one thing where I believe Muthoot or Manappurams of the world should do very well. Second stock is in the pipe space right now, which I think which is posting its results today. I think the Welspun Corp Limited looks very interesting right now. I think the stock has a potential to touch four. We have a price house target of 408 for the stock, but I think you can see much higher levels from even the stock in the real estate side, which you are talking about, Prestige State. I believe they are doing good work, Prestige and Suntex of the world. I think some of the mid caps space in the real estate should do very well, relatively better than what the large caps are doing right now.
Okay, understood that. Well, thank you so much, Mr. Jain, for being with us on the show and discussing with us all the themes, stocks and sectors where opportunities exist for investors to invest in the current market scenario, and also where to stay cautious at in this current environment as well. Pleasure having you with us on Business Today TV. Let's look at how the markets are doing at this point in time. We're just about 13 minutes away from the day's closing, and you're seeing the markets inch slightly higher now, 0.2% uptick for the Nifty. It's trading at 18,635. So some more buying coming in just at the fag end of the day's trade. The Sensex also moving closer to the 63,000 mark, up by 140 odd levels at this point in time. But will the markets again scale those levels achieved in yesterday's trade is something that we'll keep an eye out on. So do stay tuned with us on Business Today TV to catch all the updates from the world of business and stock markets. Until then, thanks for tuning in.
Some people, they want to get better return.
He is a self-styled investment advisor with more than 10 lakh followers on YouTube and more than 5 lakh on Twitter, doling out investment advice to investors, all without having the necessary SEBI registration. His YouTube site even boasts that he is not SEBI certified. Still, investors seem to flock to his videos.